Hey everyone, it's Niall at LearnToTradeTheMarket.com. Welcome to today's video. It's a short trading week. We've got Friday off, and next week's also a short trading week. We've got Monday off. We've got that Easter long weekend. I've actually already been on a little holiday over the last few days. I haven't posted a video. I do apologize for those members that have signed up expecting a video. But without further ado, let's get on to this week's video. In fact, I'll probably post another one before the end of the week, and then we'll start as normal after all these holidays pass. Now let's have a look at the Euro dollar daily chart. And I want to point out that I'm human. I do lose trades, and in this sample of data I've had some losses and I've had some wins. I have come out in front. I do want to point out that I'm a big believer that you should keep your charts simple. I don't use any indicators, I don't use volume, I don't use moving averages really in depth. I think a moving average is probably the most complex thing I use in terms of indicators. I don't use RSIs and stochastics, etc. I believe, and I have believed for some time now, that price action and looking purely at modern day technical analysis using patterns is what makes serious money in the Forex market. So today's video is about showing you a couple of setups and also keeping it real, pointing out that I do lose trades, I am human, pointing out the winning trades and showing you overall what I grossed in profit. So let's have a look at the setup which formed first on this chart. I'm looking at a daily chart. Remember, the higher the time frame, the higher probability we have in that setup. So as a professional trader, what I do is come to the market at about 6 or 7 o'clock in the morning. That's probably the afternoon for those people in the UK and America. So I'm waking up in the morning and I preempt what's about to happen. I look at the close of the day, remembering that the high time frame usually has a decent signal on it every few days. In this case, once I had this inside bar, just the inside bar of that mother candle, it's really just something like this. We have the mother candle and the baby candle. So this pattern through here is an inside bar structure. Now what I look for is a false breakout. The market would have went long around here on the belief that this would break out, and unfortunately for those people that went along, it reversed back down. Now on the close of this bar here, we had a fakey setup. It's a false break. Now a false break is really exactly how it sounds. It's a false breakout. If the market's long and it is a false break and reverses back down, they're going to have to stop out, and then the professional starts selling into that pressure of the stop outs, and then they go short and the market reverses like it has through this sample of data. Now this is using plain price action. There's nothing more than daily price and candlesticks or bars on this chart. So that trade resulted in a 3-to-1 profit. That's example risking say 200. When we say 3-to-1, it's just a simple measure of our risk to reward times 3, which will be a profit of say $600. That's just to keep it really simple in people's minds. A 3-to-1 winner would be say $200 into $600. Now let's say we're going to risk $200 in every trade we make in this sample of data. Now the second trade was actually a loss, and I'll show you why. I bought the euro dollar on a retracement back to this level here. It was a level trade. Right here you can see the candle was quite volatile and punched through that level, and I was stopped out as the market moved through. So that was a scratch trade, and I lost say $200 for example's sake. Now the third trade that I made was very similar to this one at the top left. A little bit cleaner here because we had the existing price momentum already starting to roll over. We can see an inside bar structure. There's the bar that's inside this mother candle. So when we see that, as I said, in the morning I woke up and I've seen an inside bar, so I'm all over it. I'll write it down, I'll punch in the trade parameters into my little notepad that I've got here, and I'll wait for the signal. And the signal here was the false breakout again. Because I'm trading with this existing momentum to the downside, I needed to see a break of this level, which happened here, and then it shimmied back down, and squeezed out all those traders that had bought into that breakout, and it's now squeezing them back. And the short sellers move in, the professionals, institutions, and brokers start selling, and they're pushing this market back down and stopping all those retail and idiot traders out who took the breakout. So don't feel bad if you did buy that breakout, because you've actually made me money. And that's what a professional does. They take money from the uninformed and uneducated traders. Now, price action analysis teaches you how to look for these patterns. And I don't really know too many people out there that are contrarian traders. You've got to do the exact opposite to what feels natural. Now, this market was moving up. I don't know many people that would want to sell that because it's going up. If you get a signal to go short when the market's moving up, it's an emotional challenge. It's a paradox. You're like, well, I'm fighting the shorter term trend here. Isn't everyone going long, you ask yourself. Then you've actually got to think like a professional. Well, if most retail traders lose, then the professionals are obviously making the money, and what are they doing? Well, they're selling into you when you buy. Now, this setup is my proprietary setup. I don't see it anywhere else on the internet, and that tells me that most people just aren't contrarian traders. Professionals are contrarians. And the fact that I'm one of the few people out there that teach price action, let alone contrarian trading, must be an extremely valid point. Okay, so just to put this into perspective, we've used the $200 risk variable as our standard amount of risk on any one trade. Obviously, for those bigger hitters, we're going to be trading larger size than that. But when you're beginning, $200 to $500 is the standard amount you're going to risk. So I've used that for today's example. And just to recap where we're at, if we're risking that $200, remember that first trade through here was a plus $600, or 3 to 1. The second trade was a loss, so we lost 200. And the third trade through here, this nice fakey setup, is currently up 650 if we're presuming the $200 risk variable. This trade is a perfect trade. This one at the start had about a 70% chance. I'd say this one had close to an 85% chance, because a fakie of this nature is so obvious to me based on my experience. I load it up, and that's the difference. If you're really confident on a trade, you can load up. You can add a larger amount to your risk, but I wouldn't advise that until you become an expert at these price action setups. So if we combine the results over this sample of data, the trades that I've taken personally, it's around about $1,050 return. That would be US dollars. For me, it's actually a lot greater because I do trade larger size, but again, it's irrelevant. If you're taking my trading course, you're either trading demo accounts or hopefully trading small so you don't blow up your account. So I'd like to invite you all to take the trading course, and if you have, excellent. If you haven't, go and check it out on www.learntotradethemarket.com. There is so much to gain learning price action. If you're experienced and you're still struggling, check it out. If you're a newbie and you have no idea what you're doing, certainly start on the track correctly, learn price action, and study up on modern day technical analysis. And that's really what I'm promoting here at Learn to Trade the Market, is mentorship from professional trader myself and learning how it's really done. There's no mechanical systems or hogwash like that. You're going to learn a way to look at the market and interact in the market like a professional, and hopefully make some decent returns like we have over this example today. We'll see you in the next video. Take care and safe trading.